So on our August special for the webinar series, I'm going to talk a little bit about credits and ways that you can save money on solar after you've installed it. So how can you get a little bit of a discount or a regularly recurring payment for installing solar and storage. So I'll tell you a little bit about myself, explain kind of what different incentives exist, because there are a lot of different types of incentives and they're different incentives from different places. So I really want to spend this time to help you learn about what are the different things that you should be looking for and where you should be looking for them so that you can easily uncover incentives in your area, because some exist on a national level and others are on a utility basis. So making sure that you know what's available in your region is really helpful. So my name is Madeline. I have been involved in solar and storage since early 2016. And really since the beginning of my solar career, I've been involved in the battery space. Originally it was designing systems and selling them to mostly DIYers, off-gridders to some extent. And, you know, more and more recently, we've seen a lot of grid tie battery backup. You know, storage is becoming much more in the forefront of the solar conversation. And so now as the energy storage manager at Soligent, my goal is to help educate installers and help educate end customers to learning about how storage can bolster your solar system and kind of what system benefits and what system changes happen when you start with a solar system and add storage. And I do this through hosting these webinars, also by staying up to date with all of our vendors to make sure that I know all of our products and can make sure that our products are going to fit for each person's application, because, you know, every system is different, every home is a little different, and so I want to help ensure that every system is designed the way that it should be for the application. So let's talk a little bit about what is available to you in terms of incentives. So Desire and Energy Sage are two really good platforms that you can use to help learn about systems. So Desire is the database of state incentives for renewables and efficiency. So it's a very large, comprehensive database, if you will, for incentives across many different industries. So it has information on solar, it has information on different energy efficiency things. So you may find things that you didn't even know you were looking for in Desire, and it's each page is on a state-by-state basis. So that's kind of the first place I would start looking for any sort of rebate and up-to-date information on them, because they will tell you when the web page was last updated, and it's very active. The other place is Energy Sage. Energy Sage is a great tool. They have a lot of homeowner-based information and installer-based information for kind of all different aspects of the solar game. So those two places are kind of my first landing spot for what information am I looking for when it comes to solar and rebates. So here are a few different options for things that you can expect to see potentially in your state. So the investment tax credit is a federal level tax credit that solar systems across the country are capable of getting. Then we have more state tax credits, and so that's going to be not on a federal level, but on a state level. And maybe your state, that's all you're going to get is the federal tax credit, and then a state, let's say a sales tax credit or a property tax exemption, something like that. Additionally, cash rebates are available through either a utility or through potentially the state government. So look at a few different places for those cash rebates. Net energy metering is probably the most prevalent and well-known type of incentive program, and we'll talk about where that's applicable. SRECs are similarly very popular, particularly in the eastern part of the United States. And then we'll touch a little bit on performance-based incentives, which are less popular in the States and more popular in Europe and Germany. So again, where can I look for these incentives? Federally supported, state supported, from even your local municipalities. It's possible that they are going to be supporting you to go solar or solar plus storage, and then on a utility level. I'm going to dive less into accelerated depreciation and loans. I'm more focused on what you're getting if you're buying your system. But this is a great starting point for what can you expect in terms of rebates. So let's start with the ITC. I think this is something that everyone's relatively familiar with. So the ITC was originally established in 2005. And originally it was planned to end in 2007, but because it was widely popular and really helped boost the United States transition to renewable energy, it has been extended a bunch of different times. So I started in 2016, right as the 2015 ITC was extended. And so as of right now, 2020, this is the first year that it has had a formal step down. So we were hitting a 30% tax credit up until 2020. So for the last 15 years. And then now we are looking at 26% this year, 22% next year. And then in 2022, for residential tax credits, they will be finito. So take advantage of this ITC this year and next year if you're looking at a residential system. So how can I use this ITC? Like, where do I get it? So the first step is you are able to claim the ITC if you own your solar system. If you're leasing it, then the actual owner that has the rights to your solar is going to be claiming that credit. So how do you file for it? And when we send out this slide deck, I'm actually going to send out like the exact PowerPoint that I'm using instead of a PDF, because I want everyone to have the hyperlinks in the notes so that you can easily go to the different web pages that I'm using for information. So the 5695 form is a specific form that validates the renewable energy credits. So that's your kind of renewable energy specific tax form. Then the form 1040 is a typical federal income tax return that people would use. And so you're going to add the solar portion to your 1040 to make sure that on your federal income tax, you can declare your solar. So those two forms are kind of how it goes. Let's talk about some state credits. And I'm just specifically going to talk a little bit about Massachusetts, but we do have myriad states. There are likely more states than just these ones that are coming up in terms of availability for credits, but this is what I have dug up from the Desire, different places in there. So Massachusetts, the sales tax exemption is for many different products. Like if you go to your state sales tax exemption page, there's a lot of different products that can qualify for state sales tax exemption. So specifically in Massachusetts, it's phrased that equipment related to solar, wind power, or heat pump systems as it relates to the primary power for heating or electrifying your primary residence can claim sales tax exemption. Step one. From an income tax statement, if the primary residence of a solar and wind energy credit is filed against the income tax, this can be for 15% of the renewable energy equipment or $1,000, whichever is less. So Massachusetts income tax credit, you're going to get another $1,000 roughly. In terms of the property tax, you can file property tax exemption on your solar equipment for 20 years on the property. So all of this has been available on the Desire database, and I would also suggest looking at state tax information. So this year in 2020, New Mexico actually passed the New Mexico Solar Market Development Tax Credit. And this bill provides a 10% tax credit for up to $6,000 for solar energy systems. So for New Mexico, in addition to the federal ITC, you can claim this new development tax credit and also property tax exemption. Property tax exemption is a pretty popular one among states, so see if your state qualifies for that. Net metering. So again, net metering is prolific. And if we look at this specific map from Desire, this was updated in June. So very recent. Many states have a kilowatt limit for residential and non-residential systems. So in most cases, I think I'd seen a couple states was 25 kilowatts for residential. So that's, you know, majority of the systems you're going to be looking at. And the way that net metering is credited to you is a payback from your utility. So when you think about putting your solar on, you have your meter, they're running towards you if you're buying from the grid, but then when you quote unquote run your meter backwards, that's when the excess solar you're producing is being sold back to the utility. So they are buying that from you at the retail rate. Typically, your net metering is at the retail rate. Because if you're buying energy at 9 cents a kilowatt hour and you're selling it back for 2 pennies, you know, that's not really equitable. So look into your net metering policies on your state by state basis. Another thing that is, I don't want to say problematic, but something that I've heard is, you know, you get your solar system, you sign up for net metering, you're excited about all this money you're going to be saving from your energy bill, but then, you know, let's say 1 or 2 years later, the utility comes back and says, oh, we're going to do away with net metering and we're coming out with a new sort of policy that may be less favorable. So when that happens, and I don't want to say if, because it is common that net metering changes to some extent in a different state, that's when considering storage is a really good idea if you don't already have storage. Because if you're producing a lot of excess power and you're not making any money off of selling it, a really good way to take advantage of that power is to store it. So that's something just wanted to throw out there. SRECs. So solar renewable energy credits in some ways kind of go hand in hand with the renewable energy certificates that states are trying to earn with the renewable portfolio standard. So this is a lot of acronyms. We have SRECs, we have RPS, and we have RECs. So as renewable energy has kind of gained popularity in America, states have come out and said, you know, I'm going to set my renewable portfolio goal for 40% by 2040 or what have you. So in order to claim that that state has been moving towards that achievement, the renewable energy credits are a way to identify if that's actually being accomplished. So nearly 30 states and DC have an RPS, which is the Renewable Portfolio Standard. And then 8 states have a Renewable Portfolio Goal. So using these SRECs, you are basically participating in a market that can sell the rights to these. There we go. So one SREC, a credit, is the equivalent of a megawatt hour of electricity. So if you have a 5 kilowatt system, let's say you're roughly going to create 5 megawatt hours over the course of a year. So the amount of electricity you're producing is being tracked and sold. So because you are the generating capacity, but your state wants to claim that renewable energy is in their location, they're compensating you in that way. And so this is more of a market, and they can be bought and sold at different rates. So it's a little more complicated. The SRECs are typically sold between $50 and $300, so quite variable. New Jersey has the largest SREC market, and those were going for roughly like $215 to $230 per megawatt hour. Alrighty. Performance-based incentives. So a common performance-based incentive is a feed-in tariff. And feed-in tariffs aren't as popular in the States, but I still wanted to bring them up because they're kind of a buzzword that you may have heard of related to incentives surrounding solar. So they're designed as a fixed price incentive. So it's like a guarantee that you're going to be getting a compensation for the electricity that you're producing over a long-term contract. And typically, so in this case, it's a 5-year period. It may be between 10 and 20 years also. So the feed-in tariff is a way to know that you're going to be getting compensated versus if you compare it to net metering, you're relying on the retail rate of electricity for your compensation. But this is saying, like, we know the value of solar is important, so we're going to compensate the solar person, the solar system, based on the perceived value that the feed-in tariff is representing. So there's the California Solar Initiative was one of those, and Austin Energy. So I live in Austin, Texas. Austin Energy actually has a sort of feed-in tariff that I think is still active. So they may be around in different places hiding. Cash rebates. So these are also kind of on a state by state, utility by utility basis, but there are a lot that are active right now. So I want to mention a few. JEA is a Jacksonville utility, and they provide a $4,000 rebate for a home or a business with a qualifying battery system. So, you know, that's, let's say, you know, depending on the size of your system, that could almost cost the majority of the battery bank itself. If you're getting, let's say, an AGM bank. So depending on this way you're designing a system, I mean, these rebates can be pretty substantial for the cost of your system. And if they're specifically for storage, they may honestly, if storage isn't necessarily penciling out, but you want to have resiliency, these rebates can really put you kind of in the green. Oregon, so that was from the utility level. Oregon, from the Oregon Department of Energy, passed a bill, HB 2618. So for residential projects, the maximum rebate for solar is $5,000 and $2,500 for an energy storage system. For a low income system, you can earn $30,000 for solar electric and $15,000 for an energy storage system. So Oregon Department of Energy really helping you out. In Arizona, we have the Salt River Project Power and Water Utility. You can get up to $3,600 or $300 per kilowatt hour for adding energy storage to your home. And so this was listed as a first come first serve basis, which, you know, sometimes seems kind of iffy, like, oh no, everyone's going to have already subscribed to that. But they set this up for up to 4,500 participants, and there are still 3,300 spots available. So they have this little box on their SRP website saying how many reservations remain. And today I was looking at it and it's over 3,000. So definitely tons of potential for customers in the SRP region of Arizona. So go get that $3,600. Okay, the moment everyone who's in California has been waiting for, I'm sure, is SGIP. So the self-generation incentive, I want to also add, you don't need to have solar to take advantage of SGIP. You can add a inverter and a battery to a home if they're just looking for, you know, storage when the grid goes down and they are willing to let it be grid powered to recharge the battery. But I want to make a note that if you're claiming the federal ITC, you can't get that 26 now. You can't get that 26% tax credit on the storage because you need to have your solar being the battery provider for 75%, I believe. So to get the ITC on your storage, you need to have solar. Okay, how does SGIP work? We have 4 participating utilities. The general market SGIP is for any system, and that's $250 per kilowatt hour. So any system that is looking at storage is eligible for $250. Then if you start looking into equity and equity resiliency, that's where we really see a lot more money available. So I know that the amounts of money have kind of varied, that, you know, all of the, there were different times that I've been getting updates from CALSA saying, oh, all of this money in this bucket is empty, but it's still available in different buckets. So equity and equity resiliency definitely still have availability, because to qualify for equity or to qualify for equity resiliency, you need to be in a designated low income location and or in a public safety power shutoff region that's a tier 2 or tier 3 fire threat district. So there are different maps and tools to identify if you are in these fire threat regions. There are these like nice interactive maps. So if you're able to qualify for equity or equity resiliency, that's really going to be making up 85% or almost 100% of the cost of your system. But I do want everyone to be approaching this that can be claiming the $250 per kilowatt hour, because that is still very significant. Okay, I think we're nearing the end. So another type of cash incentive, I want to call it, is when you're in a rate shifting or a utility-based program. And the utility events, to some degree, enables the utility to kind of participate in your battery system. So let's talk about these a little bit. So Nevada has the Nevada Residential Energy Storage Incentive, and that is by NV Energy, so a utility. And the rate for these depends on if you're in a time of use or a non-time of use. So the maximum incentive, if you are a time of use participant, is 22 cents per watt hour. If you are not in time of use, it's only 11 cents per watt hour. So customers are able to take more advantage of this incentive if you are participating in time of use. And from a storage perspective, if time of use is beneficial for you, because you're likely able to produce a lot of power during the day, and then you can use your battery during that high peak period. Again, to continue on the Nevada initiative, the incentive is capped at $3,000 for the time of use and $1,500 for the non-time of use rate, or 50% of the equipment cost. So that's really quite a really good one to consider. Again, because we're looking at these additional ones on top of any tax credits from a federal or state level, and then we get these additional cash device rebates. So Green Mountain Power in Vermont has a bring your own device enrollment program. So if you enroll a battery for 10 years, you're setting it for a 10-year enrollment, you will receive an upfront payment of $850 per kilowatt of storage if you're setting that for a 3-hour discharge. You can also get compensated more per kilowatt if you do a 4-hour discharge. So you can allow Green Mountain Power to take advantage of your system for 3 or 4 hours, depending on how much you want to be kind of dispatchable. And then the Solar Massachusetts Renewable Target is participating for Eversource and National Grid, and I believe there's a third utility. But the way, I have to say, going on Massachusetts Smart Solar, their promotional website, it's still kind of vague on exactly how this incentive works. So you can qualify as a small project if you're under 25 kilowatts, but then it seems like the amount that you can get when you apply for just is quite variable. Like, it just depends on what they have available. So according to their little flow chart, is you sign your contract and you say, I'm small if I'm less than 25 kilowatts, and I'm large if I'm between 25 kilowatts and 5 megawatts. Then you apply through this SMART program portal. They say you're qualified. Then you interconnect. Then after you interconnect, you enter your incentive claim in this SMART portal again. Then once you get confirmation of your qualification, the EDC, which is the electric distribution company, so the utility that you are interconnected with, starts paying you. More information than that is hard for me to find, but it's from Eversource, National Grid, and Unitil. Those are the participating utilities. And that's it, 25 minutes in. So the main takeaway I want to say is that, you want to look for utility-based credits or rebates, cash rebates, any ways to have rate shifting to support solar or solar plus storage, and then tax credits from a state level and a federal level. There's definitely a lot out there. So a preemptive question someone had sent is, how do I know what's going to be available in 2021? And that's a great question. It's hard to say. If we look at that Arizona, with the 3,000 applicants still available and up for grabs, I imagine that will still be available next year. So a lot of these, if they're like first come, first serve, and they open up now, like SGIP was really hard because they got inundated with applications, and then you kind of have to process all of those. You give people a waiting period, or we're going to put these applications on hold until we're ready, and then new funds will come available. So it's really hard to predict, but again, New Mexico came out with their program this year that was starting in March. So new programs come up all the time. Old programs kind of use up all their funds. So I would say support your local trade organizations. I like following CALSA, even though I'm in Texas. Solar Austin is really great. So being involved in different trade organizations at least will help you with your local information, because they're kind of supporting you at a local level. I know that Solar Austin is heavily involved in communications with Austin Energy. So just the more involvement you can have on a local level, the more you can stay apprised of things that are happening in your territory.